What's up, guys? It's Saturday, January 13th. Don't have a whole lot of new ideas. I thought I'd discover some with you. We'll see how this goes. Mostly, I just wanted to talk about some important things in the market and how stocks move and why they move. So this is the S&P 500, right? I'm using this because my SPY chart has lines all over it. But just looking at this with no information other than this chart, you can see you can always make two arguments, but we're looking to see which one is more likely. In this chart, we have this whole area here, right here. You could argue we have an equal number of buyers and sellers in this area. We have an equal number of buyers and an equal number of sellers taking profit. The question is, so this would be considered an area of, I don't know exactly how to say it, but equilibrium, I guess. This whole area, it means that while the market is in this area, it's easy to trade. It is good for banks to be in this area because there is an equal number of buyers and equal number of sellers. Banks can get out easily, and they can get in easily without disrupting a whole lot of stuff. The market makers, however, they are interested in something else. They're interested in buying people's stop losses and also stop losses up here. So here's why this is important. Because one of two things is going to happen over the next few months. If we do not push out of this area, we need a massive move to completely clear this area. So what I'm saying is, if they start getting above this and it still looks bullish, you can't be bearish because they're going to get a massive move higher. Like SPY 500 is right here. I'm talking like 550, right? Like a massive move, like this move we had in December. Now this is a weekly chart. December and January, a massive move, right? We don't really have, actually, watch this. Let's change colors here. Okay, so from there to there, an equal opposite move. Let's not do that, actually. Let's be safe and put there to there. So let's say this would be our target, actually. 5200, 5300, 530 SPY, right? That would be an equal opposite move off of this ABC. That would push it up there. So if we get much above this area, look for a quick move up to 5300 in February. I say that because we look at this, stocks above their 50-day moving average. S&P stocks, the percent of stocks above their 50-day moving average. 82% of stocks are above their above the 50-day moving average right now, which means we're in a bull trend, obviously, because 50%, you would say, 50% is kind of indecision. Half the stocks are bullish, half the stocks are bearish. Down here below 50, then most of the stocks are bearish, This follows along very closely with the market. So we had a pullback in the summer into December, and then in November and December, we obviously ripped higher because we were at extreme selling, extreme fear, and so they ripped the market higher. But now what's crazy is this line 92.5 marked the top here, and it marked the top here. And that's interesting that we've had this pullback. So now this is overall out of the 500 stocks, 82% of them are bullish. That means you can't really be bearish for that long, because if 82% of the market is going one way, you don't want to be in the 20%. Now, if we start pulling back and we pass this 50% mark here, then we can start talking about bear markets and everything like that. But I'm talking short term, we can have a pullback here and then run another test to this area. We don't even have to get all the way back up to the top to be oversold. But if you look at 2020 peaked in June of 2020, and from 2020 to April of 21, go back to the same chart. June of 2020 was down here. This was when we peaked. Was right there. And then what did it continue to do for the next 2 years? Right? It didn't matter. That number didn't matter. So what it means is it's a short-term pullback. This one only lasted 3 weeks before the next rip. So we are short-term bearish, but keep in mind the rest of the market is still in bullish territory. 82% of the market means the 20% is probably wrong. So that would mean a continuation up to 5,300. And the reason, here's the only thing I'm would say isn't right about this is if you go back and look at 2008. So what happened here? You don't have to look at 2008. Look at here. You have to ask yourself, where is the sell all button? Where is the stop loss? If this was your area, where is the stop loss? Now, hopefully, anybody who shorted up here, hopefully they were smart enough to get out when they broke this pivot, right? And that would have pushed us up higher, and they would have taken their stop losses. But for those few people who still are short the market, if we get above that, then that's going to squeeze it higher. That's where the liquidity is, right? This is where all the stop losses are. In this scenario, all these people's stop losses, they would have been under this pivot right here. This should have been defended. This large move up right here. So if you were a long-term investor, this would have been a stop loss. This would have been a stop loss. This would have been a stop loss. And then ultimately this was the huge, I think that was probably election, wasn't it? February? I don't know. No, election was down here. I don't remember what happened in February. Anyway, that would be a stop loss. This would be a stop loss just to continue. So do you understand, like, swing lows or the stop losses, right? So what did they try to do? They hit everybody's stop loss and then they ripped it higher. Right? They hit everybody's stop and they ripped it higher. Let's continue and see. This one, they didn't quite get there actually. They might have been going for this stop loss. See how this would have been a pivot? So they hit that stop loss and then they hit that stop loss and then they ripped it back in the other direction. Right? Um, and then obviously these stop losses, it was kind of a double stop loss. The people that were still holding on this one decided, well, I'm going to move my stop down a little bit. So what did they do? They swept this one and they said, okay, well, this time I'm going to move it down to here, my stop loss. If they break this out, then for sure I'm finally out, right? So what did they do? They came down, ran, hit that person, that stop loss here. They got everybody that wanted to sell sold, and then they ripped it back up in the other direction, right? We can keep playing here. So, so we got back into a bull market here again. They hit all the stop losses. They went up. They decided, okay, so where's the next stop loss going to be? It's going to be like this area right here, right? You could say you'd have one higher right here. So let's look at this stop loss. Did they take that out and then move higher? They did. They took out that stop loss and they moved higher. They came back down. They wanted to take out this stop loss. Did they do that? They did. They hit that stop loss and then they ripped higher. Right? This is how the market works. Now, the thing to remember is this is the easiest area for banks to get in and out, not up here. So what could they do? A very similar move to this. This is all the short stop losses. What are they doing? They're running into that. They're running a test of this area. What happens if they get over that just to hit stop losses? And then they could spend the next 2 years back down in this area. And their first target, look at this. There's only 2 stop losses. Now there's 3, but there's only 3 stop losses in this whole area. Look at this. Here's one stop loss. You could say this candle probably is second stop loss. That spike, that little dip there. And where's the third stop loss? Right here. Do you see how quick we can move from here down to here before they rip it higher? This would be another stop loss right here. What would they do? They've got a double stop loss. Look at this. 1, 2. They came down, tested it twice, and then that was the reversal. Right? What could possibly happen on this one? We don't care about news. They run a test. They bounce it off this one. They come back, tag this one, get into this major area that we've been fighting forever, come all the way back down, and then, sorry about all my things here, and then you can move on to your next one. That is a theory that I have. It's obviously not provable until it happens. But that is my theory, is that if they are going to continue higher from this area, they either have to hit 5,300 very quickly, and then they will come back and so either way, there's a bunch of money to be made in 2024. Either they're going to run a test of 5,300 quickly, and then they will come back down, retest this breakout area, might grab a couple stop losses out of this and make it look like a failed breakout before they rip it up again. Right? So your timeline would be January, February, March, April, May, June, July, August, and we're off. Right? And that's just a retest and bounce. That would make a lot of sense to me. If they don't get to 5,300 quickly, like within the next month or two, then we need to be thinking the other scenario and what they will do. Now, here's the thing, though. They cannot move down here. They cannot move down here until they've taken out all of this liquidity. Does that make sense? Like, it won't work. It won't work. Because all the people that are buying in 2024 saying the market's going to all-time highs, they have to capture those people. They have to trick them. They have to make it look like a breakout. That's why I've been so bullish for the last few weeks, because they have to. They can't just drop it early. If they drop it early, what's going to happen? They'll come down to this first one, people will buy that dip, and then they'll push it up to 5,300. And we can watch that. We can watch that as well, right? Because technically what happened first, they came up short of a number, so they dropped it so they could go higher. If they come up short of this liquidity and come down, then they're going to break it. That's how the market works. So keep that in mind. Our example is obviously 2008. Where they did this exact same thing. And here's why I'm leaning towards this, right? So here was the high. They came all the way down. This looks exactly like 2023 or 2022, 2023. They came in, they tagged liquidity, they started to break out. And look, they even did the 3-week, I don't know why I keep using that rectangles, but they came down, right? And then they moved up higher before the final failure, right? So this could easily be, and then look at this. What did they do? They aimed for the stop loss. They came into the stop loss, swept the stop loss, and then started the new bull trend. That's how liquidity works. It's you have to step away from the idea of who's buying, who's selling, what earnings says, what the news says. That doesn't matter. The only thing that matters is charts, price, and where the stock is going. It should have a reason to go somewhere, and you just follow that, and you got it made. You don't have to worry about how many cars Tesla sold in 2023. That's not going to tell you. You know what is going to tell you? Stocks. Because what did I say 2 weeks ago? I said Tesla is a short down to 211. It's going to retest 211. Look where we are. This is when I said this, right? This is where we are. I don't even know if there has been any news in Tesla. All I know is that they want to take out this stop loss right here. And if they can take out this stop loss, then this would be a good area to purchase it. The one that I got wrong was NVIDIA. And I don't know why I got this one wrong. Other than they didn't sweep the highs on this one. That's the only thing I can think of. Is they did not come into liquidity to be able to pull it down far enough. So what they do, they came up short of liquidity so that the next time they came up to it, they could go higher. That was my mistake. I just assumed that this was going to be the top, that was the liquidity sweep, and this was just a retest. But obviously it wasn't, and we missed that one. But, and then from here, where is NVIDIA going now? Because we don't have any liquidity anymore. We don't know where the levels are, right? So if you would say this one, you'd say, okay, if it wanted to go higher, where would it go higher off of? It would sweep this low, and then it would go higher. That's on that. Let's do a 4-hour chart here. Right. So if this holds, if this area holds, your stop could be 533, then you can have another push higher. If they popped up on Monday, broke this area, and then they could pop up, right, like this, and then they break back into this area, 552, then you know that's a short, and they're going to run a test of this line, this area, right? That's how the entire market works. So all I'm saying is the market will either have a NVIDIA type reaction. If we get a pull down first in January, then look for February to break that and head towards 530 SPY. If we break out new highs in January, if we are to take out the highs and get up here and look like we're breaking out in January, then look for a failure, because time is also extremely important. And what there isn't anything in here is a pullback. There's not been any pullbacks. There's not enough time for this to digest to make another move higher. So yeah, that's all I'm saying. Be careful, be bullish for the next few months, next 3 months, but be careful that it's not a fake out. And then we'll have that conversation when that occurs. So just looking at some of our trades here, SWK didn't really work out like I thought it would. We did get a couple of pushes higher, but nobody bought the Stanley news, so whatever. Generac still priming for another leg higher. As you can see, it came into this area. This area we got in a little bit earlier. I was expecting them to, again, everything is the same, sweep these stop losses and then move higher. That's the expectation. The move is up to 150 on Generac. That's still a valid trade. In this scenario, your stop loss now, you could make a tight stop loss and just make it under this candle. Because if they run a test of this, they're likely going to run a test of this. So we want to get out, right? So just make like even number, maybe like make 120.50 your stop loss or something like that. But Generac still looks good to move higher. Retest this area. ENVX is struggling, man. I don't know what's going on with that. They closed below our area, our buy area. Unfortunately, I think we need to get out because there's too many stop losses in this area for them to sweep without just going to the last one. So, maybe if we get back to $10, it might be a good buy. If we were for some reason to open up above 1180 someday, then we can start talking about short stop losses. And so a short squeeze stop loss would be over Friday's candle would be 1164, and then they're going to aim for this area. If they get over this area, which was 1230, then we've got our 1240. Oh no, that was the low, sorry. The high of this one was 1308. Getting over our 1240 line, that's been pretty important. There's a large seller right there, so he might be just getting rid of the rest of his shares, but getting over 13, again, that's going to squeeze you to this next area. And again, coming up short of the highs, like if they just come up here, then that's going to be more bullish for another move higher. But as of right now, I don't think it's going to work. We'll see. If you're just in shares long term, then I'm just going to keep holding this for the next 10 years. So, let's take a look at Apple. Apple, if you were looking for a short this one, then you would want them to go ahead and break this and then fail. If they were to get above this area and fill this gap, then that could be bullish. Your next lines are 194 or 199, so you could potentially be bullish on Apple for the next few days. We did have a nice move higher here, and that same move from here to here, that same move from here to here. See how this works, man? Like, you can't make that up. Nobody's paying attention to it. This huge candle right here, chopped all the way up here, and then what? It gapped. So that was the buyer. That's the move. Somebody's buying from 173 up to 189. They're buying from 173 up to 189. this candle right here. They're buying from 173 up to 189. So they didn't come into 173 on this move. So these buyers are not triggered. So what happens when they get to 189? Nothing. Nothing will happen because nobody's going to buy that. There's only sellers. There's a seller strong enough at 189 to stop this massive buy move. Do you see what I'm saying? They moved this far and then stopped. They moved this far and then stopped. Right? They moved this far and then stopped. So what are they going to do? They're going to run up to this. This buyer's not here, so they're going to run up to this. And what's going to be the problem? The seller is going to be stronger, and they're going to rip it down lower. So keep that on watch for a short. Apple at 189. Like I said, Tesla still has room to 11. Let's look at Netflix because they have earnings. So I've been bullish on Netflix up to 517. Let's go to the weekly here. And really, there's this little gap above 517. That would be an area of interest to get to for earnings. And I bet you, if you watch earnings, that these numbers that I have on my chart right now are going to be important. So, because this is a green topping tail candle, the expectation is a continuation move higher. So we did have a buyer from 473. Let's look back here. So let's do the same thing we just did with Apple. So let's say this was our buyer. Actually, it's even lower because it's the person that bought the gap overnight. That's the buyer. Moved from 477 up to 549, 550. Right? Let's see if he ever did that again. Bought this area, bought it up here. Bought this area. It actually came up short. Came up a little bit short. So the expectation is, anyway, what I was trying to say was you now have this buyer who reversed the market. He was strong enough to reverse the market. Right? It was falling and they stopped it. They stopped it. That means they're strong enough to stop selling. And then they reversed it and closed green for the week. Right? You see that? So the expectation is 173 to 549. And fill that gap, take out this swing high, and ultimately, if there was a buyer from here, there's our 517 number, see that? There's 517. Then you have your next leg at 608. So you could potentially see a move to 549 to 608 on Netflix because this buyer is going to carry it that far. This buyer is going to carry it that far. This buyer is going to carry it that far. I don't know if it's going to get all the way up to that. It's not Nvidia. Netflix doesn't make anything. Right? They just make lazy people. But watch for 549.16 on earnings. And if you wanted to buy shares, you could buy in over 495 and just hold them for another move to 608. If you want to buy a few weeks out, you can try that. You can get 549 calls for 3 or 4 weeks out and see if we close at 606. But I'm actually bullish on Nvidia right now. So we had this move to here. We had here to here. We had here to here. The only thing they could potentially be doing, and really I don't think they are. They could potentially be sweeping this high for another leg lower, and so that is possible. The only thing, I don't think they're sweeping anything important other than this high. I'm thinking, sorry. It could be, because your next stop is going to be up here. So where is the liquidity? Where do they want people to take people's stop losses before they move another direction? You know, I'm not sure if they really pulled in deep enough down here. They should have pulled into this area and swept this low, but I guess no, that's okay, because that's this candle right here. It took out this low, and then they ripped it in the other direction. So I'm gonna say bullish, man. I'm gonna say bullish to 549 with the potential of 606. If for some reason people are stupid like Nvidia and just buy it up to new highs, then your next potential after 606, if they can close a couple days above that, then they're going to run a test of 700. So, which would be a massive move from where we are today, 492. Earnings is on Tuesday. Oops. Tuesday after the bell. So watch Netflix higher, especially if we stay in this bear trend. Here's how I see it: is they ran a test of this move of equal buyers and sellers. They broke out of it. They came back in to retest that area, and they pushed off of it. So there's really no reason for them to come and retest this area. They should just continue higher. So Netflix long. I'm kind of getting tired. Let me know what questions you guys have. If there's any stocks you want me to look at, and I can do that. But thanks.